Okay, this is the second video of the trend trading band. Last video we have stopped exactly at about the basics of TT band, about I, low and M1. First of all, let's slightly go back and let's understand what is the benefit of understanding this band. First of all, what is this? Just sir, what you are doing, just trying to draw some three zones here and telling us the market will react here, market will find support here, resistance here. How it is possible? The question, big question comes, how it is possible? Because try to understand this, whatever the zones, for a simple example I will show you in the charts. These are all from where? It's not from indicators, it's from pure price, it's from pure trend up or down based on the trend. It's not about this band is not like, sir, price coming to the zone, if it rejects we will short, and price coming to the zone will, if rejects we will buy. This is not the such way of trading. Okay, try to understand, this is not the such way of trading. We are using this band both to take a trade, reversal trade, and also to follow the trend. For both the purpose we gonna use this entire band. That is what the main advantage of it is. It's not like simply, because what happens now in some indicators like RSI, if goes above 80, above 85, it is overbought. Okay, if it comes below 20 or 15, it is oversold. What happens from this zone? There are chance price will reverse, there are chance price will reverse back down. This is what many traders try to explain in their courses or whatever, webinars, videos, YouTube, etc, etc. I'm not against it, but this is just an observation. But this is not the same way we gonna, this trend trading band is all about. It's not about price coming to the zone, if it rejects we will shoot up and buy, price comes to the zone, rejects we will shoot down and sell every time. No, it's all dependent on the market trend, because in the market there are two different things. One is trend following. If the market is trending upside, it will aggressively move up with higher lows and higher high formation. Okay, there is one more concept in the market, I don't know how many are aware of it. MR, mean reversion. What happens is, price trying to move down, find some supports and come back up, come back to the midpoint or mean point. Price goes up, finds some resistance, come back to the midpoint, goes back to support, against rejects, comes back to resistance, again rejects. This is called as mean reversion. That means price comes to the extreme point of the support and resistance, and again reverse back to the midpoint or the extreme of the tight consolidation zone. This is called as mean reversion. There is only two possibilities in the market. Either market will be in a trending mode, one-sided move, or market will be in a sideways mode by mean reversion. This band will help in both the style of trading, because if some trader is only following trend following, when the market is sideways, he will be losing huge money. Because what traders do is, one thing very important is, when the market goes in a trending, traders, those who are following a trend following system, they'll be easily making money, the huge money in the market. But when the market goes into sideways, if you are following the same system here, then it is very much dangerous. Higher the chance you will be losing money. Give an example. Okay, so here look at this scenario. This is a daily time frame chart. What is mean by trend following? Here look at this, price is aggressively moving up. This is the main zone where the trend following traders will easily make money. But look at this zone. If in this zone, if you are trying to follow the same strategy which you have followed in this uptrending market, the same strategy if you are trying to implement here, loss and losses will be piling up, because this is a market which is sideways, where most mean reversion trading works. And one more, look at this, an uptrending market again here, and look at this, up, down, up, down, up, down. Here again and again price is stuck in a very tight range. The range is wider, but it is stuck in a very tight range. In this case, this is where the trend following traders again start struggling if they are not much experienced. Okay, can you understand what I am trying to tell you in terms of trend following? Okay, this is what is important, but this is where the TT band is completely different. This is from my years and years of experience. I've made it in a very simplest way. Okay, this works for me based on the market. Whether if it is a trending market, I'll be using this band to ride the trend, to capture the trend as early as possible. If the market is sideways here, I will be looking for a rejection from higher level to short and let the price come back to this M1, and I'll be looking for rejection from lower levels, a failure from the buyers from the lower level to move the price back to the M1 and to the higher levels. This is what major difference between a normal system and this trend trading band. Okay, let's again have a small walkthrough on this stage. What are all the stages by which this trend trading band can help us? First of all, to understand the market trend. Second, it helps us to understand the market phases. Okay, market phases, whether it is a trend following or a mean reversion market. It helps us to understand whether to follow the trend or to go as a mean reversion trader. And very more important, this is purely for intraday. I'm not speaking here about anything positional or swing, purely intraday. It helps us to get an idea of when to stay away from the market as a directional trader, especially option buyers, because for an option buyer, whose enemy? Sideways market is always an enemy. Okay, and third, fourth important point, it helps in reading the chart, because here we are not dependent on any indicator. Because why? Indicators, like many indicators, which is like moving average, RSI, CCI, etc., etc., are late for intraday. Once the price moves, then only the indicator will move. That is late. If you are late in intraday, problem for an intraday trader. Very important is what? Timing. Timing the market is very important. That is where this TT band will help us in reading the chart without bias. What is mean by without bias? Because bias in a term is mentioned, it will avoid us, sir, I will be only buying, sir. Sir, I will be only selling, sir. Most traders fix themselves before entering the any trade or before market opens. Why? Just by seeing SGX Nifty or just by seeing suddenly US market is up. So Dow future is showing 300 points, 200 points plus, sir. I will only buy today, sir. No, don't do that mistake. If the broader market, Indian market trend is bearish, and just because you are seeing SGX 100 points plus, 150 points plus, you are jumping and taking a buy side trade, only planning, sir, I will be only buy, sir. Why? Because SGX showing, sir. Waste. We have to read the chart. No, and one more trader, super smart trader, what this, sir? I turned on today morning TV, sir, news channel. One trader has told market will only go up, sir. That is why I will be buying only, sir. Because he has told. Problem. Read the chart, understand what is the direction, what is happening in the chart, and then react. That is where I personally like this trade TT band is all about it. Avoid the noise of bias. Fixing yourself, sir, I will be bullish only, sir. I will be bearish only, sir. Traders fix themselves every day before market or during market. No, we will be looking at what is the reaction. What is the reaction at high and low of the band? Whether price is outside this band or whether price is inside this band or whether price is trading around M1 or whether price is trading near the high or price is trading near the low. What is the trend? Everything will be analyzing. Based on that, we'll be reacting. Okay, let me tell you a simple example. If price is struggling to move and trade above this high mark, how you are expecting price to move down? No, price will reverse back to M1 or maximum price can also reverse back to the lower point. Okay, when the price is struggling to move below this low and trade below this low, then expecting a down move is waste. Higher the chance, what is higher probability here? When the price is struggling to go down, it will reverse back and move towards upside, towards M1 or towards the I zone of the TT band. Very simple. And if prices started clearly trading above it, trend is also bullish, then expecting a price will, sir, here price expecting price will come back down means problem. This is where price will continue to move up to ride the trend. Price is breaching the MR mark and clearly trading above it, and when it is approaching the high level, still there is no rejection. That means there is further upside is easily coming in the market. There are different scenarios, different perspective looking at. That is where I will be explaining during the trade plan video and during the live market. Okay.